Okay, I want you to open your banking app right now and go to your savings account if you have one. Find the interest that you earned last month. That number sitting there, that is what the bank paid you to hold thousands of your dollars for 30 days. 12 cents, maybe a dollar, maybe nothing, honestly. And here's the part that should make you furious. While you earn that, your bank took your money, loaned it out at 7, 10, sometimes 20% or more interest and pocketed the difference. They're literally running a business off your savings and they're paying you next to nothing for the privilege of doing it. But there's a 5-minute fix to this. And once you see it, you'll probably never look at a traditional savings account the same way again. Now, the thing is, most people think putting money in a savings account is a responsible move. And honestly, it is. Saving is the right instinct. Trust me. The problem isn't that you're saving. The problem is that where you're putting that money. And here's something that your bank account is counting on you not to think about, and that's inflation. Right now, inflation is running at around 3% a year, especially when we're looking at things today, it could even be higher than that. That means everything, groceries, rent, gas, utilities, whatever, gets about 3% more expensive every 12 months. So your dollar today buys less than your dollar did last year. Now, if you're looking at a standard savings account at one of the big traditional banks and see what they're paying you, most of them sit somewhere around 0.01 APY or annual percentage yield. Sometimes it's even lower than that. And if you do the math on that, right, if inflation is eating your money at 3% a year and your bank is giving you back 0.01%, your savings account isn't protecting your money. It's just watching you bleed out, basically. And every day that your cash sits there, its real purchasing power shrinks. And that's money you worked for. The bank is just quietly making sure it's worth less every single month. And I mean, to me, that's not safety. That's just a polite way of losing money, honestly. And the part that really lands when you understand it is your bank isn't even keeping your money in a vault. The moment that your deposit hits or you put money in your account, they turn around and they loan it out, whatever it might be, right? Mortgages, personal loans, credit cards at interest rates of like 7, 10, sometimes 20% or more. And they're actively making thousands of dollars off of your savings while you only earn, nickels on the dollar every single year. Think about what that actually means for a second. You're the one who sacrificed, budgeted, and built the savings account, and the bank is using it to run a profitable lending business, then handing you back a fraction of a percent as a thank you, right? The system isn't broken. It's working exactly as it was intended to, but it's not working for you. And honestly, there's a straightforward way to stop it, and it doesn't really require any investing or anything like that. It doesn't require taking on any risk or locking your money away in CDs or, whatever people might tell you, right? It just literally requires knowing where you got to put it. And honestly, it's this really simple thing that it doesn't take a lot to think about once you start doing the research. And it's called a high yield savings account. And honestly, despite the name, there's nothing complicated about it. It's a savings account, same concept, same purpose, except it pays you an interest rate that actually keeps pace with the real world, with interest. We're talking 4%, 4.5%, sometimes even higher than that I've seen, depending on, the current rate environment. So compare that to the 0.01% your traditional bank is offering, right? And that's definitely not a small difference. It's a completely different category. So I know you might be wondering, why can online banks afford to pay you so much more? Well, let's think about it for a second. It's because they don't have physical branches on every corner. There's no rent on thousands of locations. There's no army of tellers. There's no marble lobbies. Their overhead is a fraction of what traditional banks carry. And instead of pocketing that difference as pure profit, they pass it back to you as interest. So here's the thing that it's not. It's not investing. It's not the stock market. It's not crypto. There's no risk. There's no volatility. There's no chance of logging in one morning and finding your balance has dropped. Your money is still completely liquid, meaning you can withdraw it whenever you need it. And on top of that, it's FDIC insured up to $250,000. The same government guarantee that covers your traditional bank account. You get the same safety, same access, and a dramatically better return. But we'll talk numbers now because this is where it really clicks. Say you got $10,000 sitting in a traditional bank account or a traditional savings account at 0.01% APY, right? After a full year, 365 days of your money sitting there working for the bank, they pay you $1. That's not even a typo. You get a single dollar. Now, move that same $10,000 into a high yield savings account at 4.5% APY. The exact same money, the same zero risk, the same ability to access to access it wherever you want, right? At the end of the year in this account, it pays you $450. That's a car payment. That's a week of groceries. That's a flight somewhere. I mean, it could be anything, right? And it's literally generated automatically in the background without you doing a single additional thing, literally just by choosing the right account, right? And that gap compounds. So every year you leave money in the wrong place, you're not just losing interest on what you could have earned, you're losing the interest on the interest. And it adds up faster than most people realize, I think. So I want to be direct about something. Your emergency fund, your short term savings, any cash you're holding and not actively investing, it shouldn't be sitting in a traditional bank account. I mean, let's be honest, right? Full stop. If it is, you're voluntarily handing over thousands of dollars a year to an institution that is already profiting off your deposits. And opening a high yield savings account takes like 5 minutes online. You could find, there's a ton of them nowadays. Capital One, Discover, places like that. You link your existing bank, you transfer the funds, and then that's all you do. Your money is in a better place instantly. There's no paperwork, no branch visit, no financial advisor needed, nothing like that. It's literally one of the easiest, low effort financial upgrades that you can make if you're not already doing it. And the only reason not to do it is not knowing it exists. So now you know, but drop in the comments, let me guys know if, where you guys are keeping your emergency fund at right now. I just want to know, what you guys got going on and where you guys are keeping all your funds and stuff like that. I know I personally have my own high yield savings account I've been having for a couple years and been racking it up. So just interested to see what you guys going on in your own situation. And if this was helpful, it would help us, a subscribe wouldn't hurt. Like I said, I do this every day, every week when I can, just real strats, none of the fake stuff, no fluff, none of that stuff. So I'll see you guys in the next one.